Hi traders, you're welcome back to another video where we break down powerful trading strategies to help you navigate the Forex market with confidence. Okay, so in this particular video, we are just going to be diving deep into the slingshot trading strategy. It is a method that is designed to help you identify precise market entries and capitalize on trending price movements. Okay, so if you are excited to learn how this strategy works, make sure to hit that like button and subscribe to the channel for more actionable trading content. All right, so let us jump right in. We're just going to be starting with the basics. Okay, the slingshot trading strategy is all about using retracements in the market. Okay, we use that retracement to time the entries. So you're going to be using retracements to time your entries for maximum efficiency. So think of a slingshot, as the name implies, is a slingshot trading strategy. So think of a slingshot. You pull it back to build momentum, right? And then it propels forward with force. So this strategy works the same way. The core idea is to wait for the price to pull back. Now this is a bullish trend, right? And we have a series of pullbacks, right? There's a pullback, there's a pullback, there's a pullback, right? And so on. So the core idea is to wait for the price to pull back during a trending market. Instead of entering impulsively, you wait for the retracement to show signs of exhaustion, right? Once the market shows it is ready to continue in the direction of the trend, that is your cue to jump in. Okay, so let us break it down step by step. The first step is to identify the trend, right? The first step is always to identify a strong trend. You can use tools like moving averages, for example, right? For example, you can use tools like moving averages, trend lines, or higher time frame analysis to confirm the market direction. You want to make sure you are trading with the trend. It is very important. Trade with the trend and not against it. Now, secondly, you have to wait for the pullback. Okay, looking for a retracement or minor correction in the trend. All right, so this is the pullback phase of the slingshot. So tools like Fibonacci retracement, right? You can actually make use of Fibonacci retracement levels, right? For example, you can see Fibonacci retracement shows us potential levels where the pullback is about to come to an end, right? So you can make use of Fibonacci retracements or dynamic support and resistance zones, okay? Just to help you pinpoint areas where the pullback might end. All right, and remember that moving averages actually give you dynamic support and resistance zones. Now, next, you have to confirm your signals. This is where it gets exciting. Wait for a clear confirmation that the pullback is over and the trend is resuming. All right, now this could be a candlestick pattern, right? Like a bullish engulfing or pin bar, or it could even be a breakout above a key level. Okay, so for example, in this case, we can see that we had a series of doji, right? In this particular example, we can see that we had a series of doji showing that this pullback is already getting exhausted. So right after the last doji formed, you can see we had about, I think, about three dojis consecutively. Yeah, this is a long leg doji, is another long leg doji, and well, this kind of is a long leg doji as well. So although this one is shorter than the previous, but three consecutive dojis, and of course we now had a breakout from the doji. So this would have even been a good place to enter a buy. That was a confirmation, okay? So you can pull the trigger after you've got your confirmation. Place your trade in the direction of the trend and set a stop loss just below the retracement low. That's if it's an uptrend, or above the retracement high if it is in a downtrend, okay? To protect your capital. Now, indicators can help fine-tune your execution, okay? So here are a few that work well with the slingshot trading strategy. As for moving averages, you can see I added the 50 EMA, right? So you can actually use the 50 EMA or the 200 EMA, okay, to identify the direction of the trend and dynamic support or resistance levels. Then you can also make use of the relative strength index to look for overbought and oversold conditions during pullback phases, okay, to confirm the retracement is nearing its end. And then you can also make use of the MACD, right? The MACD can help you to, watch for crossovers or momentum shifts that signals the trend continuation, all right? So, as with any strategy, it's important to note that risk management is critical, all right? So here are a few tips to pay attention to. 1. Never risk more than 1 to 2% of your trading account on a single trade, okay? Secondly, place your stop loss at a logical level. Place your stop loss at a logical level, just beyond the retracement low or high. For example, in this case, we entered a buy, so stop loss ideally could be just below the retracement low. If it was a sell trade, then it's going to be just above the retracement high, okay? And then it's important to always use trailing stops to lock in profits as the market moves in your favor, all right? Remember, the slingshot strategy is not about predicting every move perfectly. It's about stacking the odds in your favor and protecting your capital, all right? So that is the slingshot trading strategy. It's simple, effective, and works across various markets, okay? Whether you are trading Forex, stocks, or even crypto. By mastering this approach, you'll gain the confidence to wait for better entries and avoid chasing the market. If you enjoyed this video, make sure to hit the like button and subscribe to the channel for more strategies like this. And don't forget to leave a comment below. Have you tried the slingshot strategy in your trading? Let me know how it's worked for you, okay? In the meantime, thank you for watching, and I'll see you in the next video. Happy trading.